It is Wednesday, May 2nd, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And oh my goodness, was it it was a decent get your ass kicked at Jiu-Jitsu Wednesday. I won't say it was an excellent one because it left just a teeny tiny to be desired on my own part. I always had the hardest trouble with triangles, and we did a lot of work on triangles today, and so I get really annoyed at my inability to get my legs up high enough. I mean, because I'm a big guy, my legs are huge, so it's not exactly easy to get them up high enough to get them up over some guy's shoulder and pull them in at the same time, and it's a coordination issue with me. I've always had a little bit of lower body coordination, agility issues. I mean, I'm not the most agile guy in the world. I'm a little faster and a little stronger than some, but I'm also bigger than most. So, physically, anyways, I'm not taller than a lot of people, but I am a little meatier. But anyway, so yeah, it was a lot of fun working the triangle and just trying to get my feel down. And I will say this, my feel for getting the triangle has improved slightly. I almost got a triangle during some of the positional sparring that we were doing, and that made me feel pretty good too, because like that, I don't think I've ever triangled anybody. I think I might have gotten close to getting one guy, but ultimately I think he tapped because I yanked him back down to the ground, but with my legs, my legs and my abs. Yeah. So, like I said, the trick for me, I don't know. I think I need to buck my upper body up or work on my shoulder walk a little bit to try and open up some more space for that, because I don't think I'm allowing enough space for my hips to be at a 90-degree angle, and that's really the optimal angle you want to be at, according to Coach anyway, for the triangle, at least the setup thereof. And so like I said, we were working a triangle from closed guard. And honestly, I really like that one. I mean, if I could get the grip either behind the collar, I was thinking maybe if I did a cross collar grab, but maybe up towards behind the guy's head, and kept my arm at a cocked angle, really tight to my body and whatnot. That might be easier for me to get the triangle, without the guy actually knowing. But I mean, I would have to I would have to take my leg, I'd have to disengage, put the leg on the ground, and then really buck to open up, instead of trying to push away from him, but push more toward his right side. If I had, say, the back of his gi on the left hand side and pulling that shoulder down a little bit, it might be a little bit easier to get my right leg up and over his shoulder. And also I would be a little bit closer to just reach right up and grab my ankle and really secure that. But again, the trick would be opening it up to where I could get my hips re-engaged to about a 90-degree angle. So if I was leaning on the hand that I pulled his arm through with, that might work. I don't know. I'll have to think about it a little bit. That I'll work on it with Chuck Summers. The guy is like a study guy. It's everybody else really works hard on studying their stuff, but it's he comes to class with books and something. And I'm not saying that literally, but the way that he's approaching it, I feel I don't know. I feel there's he's actually got a notepad while the coach is going through the positions and whatnot, is in taking notes and shit like that, or at least he's doing so mentally, and I don't know, he's really, really technical, and he's a very well studied practitioner. I'll just say that. I know he's done a few competitions, and I really like his perspective, because he's more a whole body guy too. He's like all really into diet and exercise other than jiu-jitsu to improve the performance of jiu-jitsu, and I think that's essential too. So, I guess it's because his attitude towards it is more in line with mine than maybe some other people. I don't know, but anyway, I expect that I'll probably get an opportunity maybe at a Monday 6 a.m. class to go through it with him. He was more than gracious with his time today, and we did do a little bit of work on a position that I had difficulty with at the tournament. The gentleman that was my opponent at the tournament was he kept getting me in side control, and then taking me to an armbar from there. And so I was trying to work on that with Chuck. It's like setting up the frame on the neck and getting a hand on the hip, and then really bucking that shrimp out to make enough room to get my knees back in on him. And so that was really productive. And I need to be doing that like a lot more. Anyway, let's go ahead and bust down into our first dance for the evening. And I had not picked anything out, as usual. It's one of those things. Anyway, I do have Dead Embryonic Cells running, and that does feel like a good first dance. So let's go for it. Sepultura, Dead Embryonic Cells, here on Coin Metal. And that was Slayer with Serenity and Murder. Yeah, the last one was the computer's pick. You can thank AI or something like that. It's saying that kind of business to you. I don't know if you guys have been watching the Bitcoin Cash, but I'll tell you what, man, that thing has been going rocket sauce for the last couple days. There's a little bit of a dip between the 26th and what is it, the 30th here? Oh no, it seemed to recover on the 1st. But yeah, man, it picked up like 10% today. So I mean that's no joke. It's up over $1,500. But what's funny is I was thinking about this, and what if Bitcoin Cash was meant to incentivize enough people to use it instead of regular Bitcoin for the number of SegWit transactions to represent a higher number of transactions in the blocks. See, they've never been able to hold the majority of the transactions in the blocks. They've always been around like 30-something%. And there was a minor uptick, I think, today or the other day, but it still hasn't hit 35%, which was what it was trending at before recently. But anyway, like I was saying, that's something that has been not part of the overall conversation when it comes to Bitcoin. Is everybody fixates on either the SegWit Lightning Network business or Bitcoin Cash. See, there's no conversation about those of us who are still using Bitcoin according to the traditional method, where we're transacting, our wallet addresses start with a 1, and we're not doing our bullshit off-chain or any of that other bullshit, that we're using standard Bitcoin addresses, not SegWit addresses. And I think it's really funny that's the case. And it makes me wonder if, what maintains people using legacy addresses if, in fact, there's this big desire to use the SegWit. I mean, really, where's the discontinuity here? What's What's keeping people using regular Bitcoin? Personally, I think it's preference. That people like Bitcoin the way it is and don't really want to change it to SegWit and don't want to use it off-chain and want to use their regular old addresses. And personally, I think that's the most prudent way to go about it. You know, it's like, if I want to do something, if I want to do off-chain transactions, you know what I'm going to do? I'm going to use my fucking debit card. It's about as off-chain as I need to get. I mean, I know that's not like, you know, in tune with the whole crypto ethos and whatnot, but, you know, I've started looking at money a lot differently in the last few years, and I just look at it as containers of monetary value. You know, I don't, and each one of them has their own traits, you know, their own methodologies and how they do things, and the hardware that's associated, and the parties that are involved in curating them and tending them and whatnot. But that's just how I view them. So like Bitcoin, I think that because of its attributes, one of the aspects of it is that it causes it to go up in price every time the Federal Reserve prints up a bunch of money. Because the money's got to go somewhere, right? They don't put it all on the stock market. That would make things too obvious. You know, the stock market would shoot up to $35,000, and you know, everybody would say, "Oh, wait a minute, you know, I'm not the one investing in this, and that, and I know Fred isn't the one investing. Who's buying up all this fucking stock and keeping the Dow really, really high? Oh, yeah, it's the Federal Reserve. What a surprise!" But anyway, that money has to go somewhere. You know, and they've kind of narrowed returns, I think, a little bit on conventional markets, and I think that in itself would drive people to crypto, especially with things like Bitcoin Cash doing a 10% bump in one day. I mean, come on now. You gotta, like, not like making money to not like that. I mean, did anybody listening to the show not like making money? I haven't met that person yet. Not in crypto, anyway. As a matter of fact, sometimes I find the abject greed to be just a little bit overbearing sometimes. But nonetheless, give me a fucking break. People like making money. Why would you give a fuck if it's Bitcoin Cash or Litecoin or anything like that? Unless, of course, you just objected to their politics. And I mean, that's one of the things that keeps me from investing in Ripple, because that thing has just been all goofed from the beginning. As far as I can tell, I attributed it to be probably the catalyst of the next financial shitstorm that hits this planet, and I'm not entirely certain that's not going to be the case. I'm just saying that there are other candidates on the table now. So, yeah, we might have to call it something else, not necessarily the GR Bufu, but, you know, we'll find out, right? Anyway, I caught this first thing on my Twitter feed today. And it was really funny because originally this was posted by the Bitcoin.com Twitter feed, and this is actually a site on Bitcoin.org. And I was really surprised because I thought it was like a spoofed web page, like that, you know, that Bitcoin.com spoofed a web page and put it out there and made it look all like, you know, Bitcoin.org, but like they did something different in Bitcoin, or, you know, they used like a 1 instead of an I in the coin or something like that in the URL to make it look like it was Bitcoin.org. But no, this is actually a web page on the Bitcoin.org website. And if you go to Bitcoin.org, where is it here? It's under the resources tab at the very bottom. You see it says Bitcoin Core, and so you click on it. And like I said, this link was posted directly up on Twitter by Bitcoin.com. And so, like I said, I thought immediately it was a spoofed page, but no, this thing is real. Bitcoin Core, helping you keep Bitcoin decentralized. Now, listen to the words very, very closely. And those of you who have been involved in cryptocurrencies for at least the last 2 or 3 years, you're going to catch all of this stuff, and without me pointing anything out. Now, I'm going to do my best to give it a clean read, just so you can get it all into your brain in one shot. So here it is. Bitcoin Core is programmed to decide which blockchain contains valid transactions. The users of Bitcoin Core only accept transactions for that blockchain, making it the Bitcoin blockchain that everyone else wants to use. It is these users who keep Bitcoin decentralized. They individually run their own Bitcoin Core full nodes, and each of those full nodes separately follows the exact same rules to decide which blockchain is valid. There is no voting or other corruptible processes involved. There's just individual software following identical rules, math, to evaluate identical blocks and coming to identical conclusions about which blockchain is valid. This shared agreement, called consensus, allows people like you to only accept valid bitcoins, enforcing Bitcoin's rules against even the most powerful miners. In addition to improving Bitcoin's decentralization, Bitcoin Core users get better security for their bitcoins, privacy features not available in other wallets, a choice of user interfaces, and several other powerful features. Now, for those of you who have been involved in cryptocurrencies and you heard the association with the word decentralized to this description, did you at all get the impression that it actually fits the definition of the word decentralized as you know it? I mean, because personally, I'm not seeing a whole lot of decentralization of choice in this. I mean, because from what I can tell, this is a top-down kind of business. You know? This is Bitcoin Core telling you which transactions are valid. Who defines the protocol that determines which transactions are valid? What if they decide at some point, you know what, we're just not going to honor any coins that were mined before, I don't know, 2015. We're not going to honor any coins that have been sitting still since 2015. Any coins that have been mined after that, good. But if people have been hodling them since 2015, we're not going to honor them on the Bitcoin network. They could adjust the rules so that that's the case. And the quote-unquote nodes that are working on Bitcoin Core, they won't be any wiser. They'll be getting their instructions from the top down. Bitcoin Core is programmed to decide which blockchain contains valid transactions. The users of Bitcoin Core only accept transactions for that blockchain, making it the Bitcoin blockchain that everyone else wants to use. Now, what if I don't want to use that one? What if I want to use another one? Now I've just broken their protocol. Now my transactions probably won't be counted in the blocks because they're not valid transactions according to the protocol rules that these guys define. So again, I'm starting to wonder about this whole Bitcoin Cash thing. I'm starting to wonder if it isn't meant to drive some of the traffic over to another chain so that Bitcoin itself could be subsumed. Or consumed. One of the two. And one of the things that makes me think that is, I've been listening to Roger Ver this whole time, and at one point or another I heard him talking about like, oh yeah, we can do Lightning Network on Bitcoin Cash. Why would I want to do that? Why would I give a fuck if it works faster? You're going to give me 32 megabyte blocks here in, this month. So, why do I need to do things off chain if I've got all that block capacity? I don't get it. You know, and I don't know. Like I said, it's just my suspicious mind working overtime. You know, trying to keep my eye on the ball, seeing everything that's going on, and trying to look at things from different angles. And so, you know, I regard Bitcoin as something that should be preserved, as something that the public can participate in from dev on down to miner, down to end user. And ultimately, I think it should be the miners who decide exactly what protocols they want to be running. You know, this bullshit, overpower miners, fuck you. The miners are the network. The miners create that Bitcoin blockchain you're talking about. So what, you're going to be redefining the protocol yourself and the miners are just going to have to deal with it or not mine your shit? Because I'll tell you what, you start putting those kind of prices on it, they will drop your chain. They will switch to another protocol and be like, fuck this SegWit bullshit, fuck you, fuck Blockstream, fuck Lightning Labs, fuck all of you. And all of this wonderbutt bullshit that you've been chatting up for the last, 3 years of layer 2, all that'll go by the wayside. You know, I am not at all excited about this whole Lightning Network business, as you may be able to tell. Because to me, it just creates a third-party position that can be consumed by an existing legacy service provider. You know, where you could end up like with Goldman Sachs or Chase Manhattan or Wells Fargo or somebody else doing the transaction processing for the Bitcoin network. Doesn't that sound wonderful? And I mean, these people that talk about it, they talk about it in really, really confused language, or not really confused language, but just, how should I say this? Multifaceted. Can be taken in multiple different ways. It's very vague. But I would say multifaceted because you can draw distinct meanings from it. You can make distinctive inferences about it. But they aren't necessarily the intended ones, because there are others that are just as likely, if not more likely, than the suggested purpose. So, but you know, the other thing that makes me think that there's some movement going on in the background, you know, and there are always other indicators of it. And usually when there's this kind of language coming on, it leads me to believe one of two things. Either A, people are coming to terms with the reality that cryptocurrencies are bringing, and they're saying, okay, well, we can't really fight it anymore. It's kind of obvious. We're just making ourselves look stupid by saying that we can. So we're just going to, you know, kind of give up on it. Or number two, they actually have an advantage. They have something that they can flex in the background. And they're basically trying to make people complacent by making them think that they have one. And given the parties involved, I think either one is equally as likely. I'd like to think A, but B is always a reality that should at least be considered. Anyway, this one's on ccn.com, and this is authored by, I guess, Bitcoin Opinion. Who the fuck is Bitcoin Opinion? No indication of gender here, so let's do just a teeny tiny investigation here. Nope, no suggestion of who in fact we're talking about, so we'll just go with it. Continuing on, we need to respect this generation's interest in Bitcoin, CFTC chairman. And this is authored May 2nd, 2018 at 2:40 p.m. because it's 1440. And no indication of penis or otherwise. Continuing on. The chairman of the Commodity Futures Trading Commission, CFTC, said this week that cryptocurrency is a generational interest and that regulators need to treat it with respect. 1. Christopher Giancarlo, who was sworn in as a CFTC commissioner in 2014 and has led the commission since August 2017, shared his thoughts on cryptocurrency regulation at the Milken Institute Global Conference, which took place this week in Los Angeles. Quote, "We need to take a moment and respect this generation's interest in this new instrument, Bitcoin," he said. According to a Reuters report, quote, "Not with derision, but with a little bit of attention and respect, and respond with policy initiatives that really are thoughtful and forward-looking." Okay. Giancarlo, who says he will retire after his 5-year term ends next April and President Trump appoints a successor, compared consumer interest in Bitcoin to the, quote, "cultural change that baby boomers instituted when they arrived on the scene in the mid-20th century. He explained that younger investors have much less respect for mainstream financial institutions due to growing up amidst the financial crisis, and said that they see Bitcoin as a way to remove these middlemen from the economic supply chain. He said, quote, "There is something going on here that is generational. Just as the baby boomer generation lost faith in the leaders that came before them and tried to seek a cultural change in those days through sex, drugs, and rock and roll, I think there is a generation that also has lost faith in us that led them through the financial crisis, and they see technology as a way of disintermediating institutions for which they don't have a great deal of respect." Giancarlo has issued similarly conciliatory statements about cryptocurrency investors on multiple occasions, beginning with his remarks before the Senate committee hearing earlier this year. His heartfelt opening statement at that hearing earned him the nickname Crypto Dad, and he has taken to using the hashtag CryptoDad when he tweets about cryptocurrency. Earlier this week, Giancarlo said that Bitcoin was, quote, "like gold in several respects, even though it is perhaps not ideal as a medium of exchange." And on that point, I would have to rabidly disagree with him, because I've found it to be an excellent medium of exchange, certainly much better than my credit card. It's not a mystery as to whether or not the transaction has happened. I've got confirmations. I swear. I don't understand why people would be willing to settle for less than that. So what? The network gets congested because a bunch of assholes want to keep it at 1 megabyte for the block size limit. But you know what? They're not always going to be there. At some point or another, I believe they're going to end up losing interest in this because it'll be quite obvious, even though there have been some sort of deployments of something with regard to Lightning. And it seemed to me I have a tab open concerning this. God damn, I got a lot of tabs open. Oh, that one's not important. Ooh, we might want to talk about that one, though. And that one crashed. What the fuck was it? Make sure it wasn't YouTube. Oh, that one was kind of important, but I don't know that it's really significant to us here in the United States. Fuck it. I'm going to do this one because it's really, really short, but this is something that I've anticipated would happen, and I believe that the next phase of this is going to be that the PBOC or whoever is monitoring China's networks is going to be looking specifically for Bitcoin transactions. And so this little business might change and people will just say fuck it and go with privacy coins. Anyway, this one's on QZ.com, Quartz. Leak, Candy, and Big Pancake. The slang Chinese crypto traders use to hide from the authorities. If you suddenly found yourself in a chat group where Chinese investors buy and sell cryptocurrencies, chances are high that you'd get frustrated quickly, even if you can read the language. Why are people enthusiastically talking about the prices of pancakes and egg tarts? Why the hell is someone trying to buy a concubine? Is this some kind of hipster community that is obsessed with avocados? While crypto enthusiasts in the West have created a lexicon of their own, a parallel slang is flourishing in the crypto trading community in China, a country that once dominated global Bitcoin trading before authorities cracked down on local exchanges in September. Chinese crypto investors are still trading peer-to-peer on services like WeChat and encrypted apps like Telegram, and discuss trades on online forums like 8btc.com. The jargon helps avoid further government intervention by obscuring their intentions from prying eyes. They probably won't thank us for this, but here's a glossary to help demystify what's going on. Let's see. Biquan, literally coin circle, refers to the crypto space. Let's see. Boss refers to a trader with a lot to invest, the equivalent to a whale in Western crypto slang. Dog banker. From gambling to stock market parlance, retail investors use the term to refer to big-time traders who can easily move the market and burn them, typically used in complaints. Let's see. I'm not going to read all of these, but yeah, I think this is pretty interesting that we're seeing them reverting to slang just to keep doing what they were doing before. You know, it's like, no, you're not going to stop me. I'm just going to switch to a parlance that you don't speak or understand. Anyway, let's see here. I don't want to do this blockchain business anymore. That stuff just bores me. When people talk about blockchain, I really think about who's going to mine your coin. You know, are we talking about some sort of Ripple derivative or Ethereum or Bitcoin? You know, are you planning to be doing your project as some sort of layer 2 technology that you're dependent upon everybody going to Lightning to use, or, you know, what's the deal? Whose blockchain are we talking about here? Anyway, but yeah, so Bitcoin Core, not really Bitcoin, and Bitcoin is still kicking. So that was my point on that whole business. And as far as the Chinese traders, dude, crypto gonna crypto. That's all there is to it. You know, you can try, but you're not going to get a wrangle on it. And I would be... I would be really, really surprised if the amount of regulatory pressure that the Chinese have been facing has been significant enough to drop the number of traders down significantly. I think once you've gotten a taste, you want to stay in. Maybe your positions are a little bit longer, but if nobody's made any notice of it, who are you to complain for them? I mean, I think a lot of people just took their crypto offline, off the big exchanges. They got together with their friends that they were already in contact with and said, "Hey, let's start up a market of our own. Do you know HTML?" or shit, you don't even need to do that. They're doing over-the-counter trading on Telegram and shit like that. So, it's just sad to see it go down like this. I'd really like to see a time when governments quit trying to interfere in the way that we're doing this. Let us get on with it. Let us get it done. Let us figure it out. And then we'll find the use for government in it. I mean, I'm not saying that government's not going to have any use for us, because there are some shysters out there. There are people that on their to-do list for the day is fuck somebody out of money. It's there. It's like maybe one, maybe two on their list. Fuck somebody out of money. Transfer some money from them to you without giving them anything. Or giving them as little as possible in order to get the maximum return. And so because of that, things are going to happen. Anyway, I got this article here on Shift Gold. And like I've said before, the liquidity has to go somewhere. When they've already bought up all the stock they can afford to have on their books, and they've already bought all the art and all the fine whiskey and all the gold that they can without pissing everybody else off, they have to revert to something else. And considering this, might just be coming to us here in crypto. Listen up. U.S. Treasury sets first quarter borrowing record. The U.S. government has hit borrowing levels not seen since the peak of the financial crisis. The U.S. Treasury's net borrowing totaled $488 billion from January to March, according to a statement released on Monday. That was $47 billion more than the department's estimate. It was also a record for first quarter borrowing, according to Bloomberg. With the Trump tax cuts coming online and spending increases passed by Congress, the rate of borrowing has ramped up significantly, and a Bloomberg report noted the U.S. will need to issue even more treasuries as the fiscal picture deteriorates. Quote, the budget deficit widened to $600 billion halfway through the fiscal year as spending increased at 3 times the pace of revenue growth in the October to March period, according to Treasury figures released earlier this month. Tax and spending measures approved by Congress and President Donald Trump are expected to push the budget gap to $804 billion in the current fiscal year from $665 billion in fiscal 2017, and then surpasses $1 trillion by 2020, according to the Congressional Budget Office. With a higher than expected cash balance of $290 billion at the end of Q1, the Treasury Department said it will only have to borrow $75 billion in the second quarter, $101 billion lower than announced in January 2018, but the department expects borrowing to ramp up again in the third quarter, estimating it will need to sell $273 billion in treasuries. Treasury Secretary Steven Mnuchin said he wasn't concerned about selling so many bonds. He admitted there was a lot of supply, but he called the market very large and robust, adding that he thinks it can easily handle it. Quote, "By definition, supply and demand will equate. I'm not concerned about that. I think there are still a lot of buyers for U.S. Treasuries." That's an odd statement. Of course, supply and demand will equate, but Mnuchin seemed to forget about the other side of the equation: price. In order for demand to rise and match higher levels of supply, Treasury prices will likely drop, perhaps significantly. When bond prices drop, that means higher interest rates. We've already seen signs of this in rising bond yields. 10-year Treasuries pushed about 3%, pushed about the 3% level last week. Of course, rising interest rates have consequences. The world is drowning in debt. Raising interest rates in a high debt environment doesn't bode well. Of course, increasing Treasury yields mean the government will have to pay an increasing amount of money just to service the interest payments on the debt. That will lead to even more borrowing, creating a vicious cycle. But as recent Palisade Research article pointed out, quote, "The U.S. Treasury will get funded no matter what. Foreigners will buy the debt, or the Fed will print dollars to do it. Either way, they will borrow, no matter the cost. But individuals and companies that borrow aren't as lucky. They're forced to pay the higher interest payments." Higher rates pose a more significant problem for private companies. Palisade estimates there is over $7.5 trillion in debt floating around out there that is highly vulnerable to raising interest rates. And despite Mnuchin's optimism, it still remains unclear who is going to buy all of this U.S. government debt. The U.S. government depends heavily on three major buyers to finance its debt: China, Japan, and the Federal Reserve. All three are pretty much out of the market right now. The last time the Treasury ramped up borrowing during the financial crisis, the Fed took up the slack, but the central bank is supposedly shrinking its balance sheet. That means not only is it not buying, it is ostensibly going to dump more bonds onto the market. And we reported last month, China may slow or even stop its purchase of U.S. Treasuries. In other words, there may well be a glut of Treasuries out there in the marketplace. This means falling prices and rising yields. So yes, Mr. Mnuchin, supply and demand will equate, but the consequences could be disastrous. Yes, mon frere, they could in fact be. And, let's see, when was this authored? It was today by Schiff Gold, so probably Peter himself. Anyway, like I was saying before, that money has to go somewhere. And I mean, crypto is just this burgeoning fucking empire of new things to stuff money into. So, I mean, it doesn't have to retain the value, just has to lose the value slower than US dollars. Maybe even have a spike here and there. What do you bet the Federal Reserve will be investing in Bitcoin soon, if they aren't already? I would imagine they've probably got their own crypto trading desk, although that kind of really doesn't help. Unless, of course, they're actually connected to some other exchange, in which case that might be somewhat beneficial to them, but I'm not entirely certain how they would be intersecting with the public market. Anyway, but yeah, like I said, that money's got to go somewhere, and I imagine that at some point or another it will be coming into crypto. think 20,000 was a lot of money for a Bitcoin. I think we're going to be looking at a lot more than that. But that's just my perspective, and I'm not going to give a timeline because I have no fucking clue. Anyway, let's go ahead and throw down some music. And I wanted to put in some textures here. Regenesis, here on Coin Metal. And that was Tool with Schism. And so where to take it now? Oh, wait a minute. What's this? Oh, shit. Just announced, apparently, Anthrax and Testament to headline concert in Missoula. That's interesting. Apparently on August 20th, they will be co-headlining at the Wilma. And I've got to say, I was fortunate enough to see Testament once live. And let me tell you something. I got like the greatest deal in the entire fucking world to be able to see them at that particular venue. Because it was tiny. Okay, it was way too fucking small for Testament. Let's just say that. Alright. I think it was kind of like verging on dishonor making them perform on that itty bitty stage, because like I said, they're a much bigger band than that particular venue should have been hosting. But again, I got an awesome fucking deal because it was such a tight and intimate event. And I mean, I was pretty damn close the entire fucking time. So, you know, I know that if they were playing in some arena, you know, to 20,000 people or something like that, I would not have been able to get that close. Or if I was that close, it was because I had front row tickets to begin with. You know? So, like I said, I feel like I got pretty lucky on that one. And so, you know, you might want to get in on those tickets if, in fact, they are available. And apparently, let's see, RSVP to the Facebook event. Let's see what that's about. Testament at the Wilma, Monday, August 20th at 7 p.m. to 12 a.m. Wow. I bet you anything there's going to be a lot of fucking bands there. But yeah, dude, August 20th, if you can make it, I would go. Unfortunately, I will probably be doing something else. You know, I mean, unless some miracle happens and I get me some like VIP tickets to that thing or something like that, you know, then, you know, maybe I would have to like make some travel arrangements or some shit like that. But only if like accommodations or something were included, because that's, I don't know, it would all depend on my condition at that point, you know, because some stuff happening, and I mean not with my physical condition or anything like that. I'm actually in pretty good shape at the moment, getting better. Anyway, I saw this thing on Crypto Ninjas, and at first I was a little bit affronted to it, and I still kind of am, because I despise the idea of having to pay for anything on the internet, in an overt way anyway. Unless, of course, we're talking about a trade, or I don't know, maybe if it was like a premium service, okay, I could see that. But the reason I have any kind of aversion to it is the idea of paying by the second or something like that for some services kind of rubs me a little raw. I like flat rates. You know, it's like $20 for the service. Yeah, I'll throw down $20 for that. You know, depending on what it is. If it's worth $20 for me to see it, I'll pay it. That's all there is to it. Like if it was like the Infinity War, you know, if somebody gave me the option of seeing it here at my house on my computer, fuck yeah, I'd pay $20 for that. Fuck yeah, I'd even pay it in crypto. Hold on a moment. Let me get a little water here. But anyway, I got this thing on cryptoninjas.net. MetaMask successfully integrates cryptocurrency data from Balance. Balance, the cryptocurrency accounting tool provider from Consession, announced today some impressive news. The company's data has successfully been integrated into MetaMask. Coinciding with the release of their newest version, MetaMask's 1.15 million users now see sound pricing information across all of their ERC20 tokens in their wallet. I don't know why I thought this was about something else. Or pay by the second. Anyway, continuing on. MetaMask is the popular extension for accessing Ethereum-enabled distributed applications, or dApps, in the normal Chrome browser. On the integration, the Balance team said, quote, When we began building Balance, we quickly realized we also needed institutional-grade data. We set out to develop our own blockchain scrapers and custom exchange pricing APIs. Using primary data, we were able to meet the high expectations of our enterprise clients. Demand quickly grew for our robust data feeds, so we have decided to empower third-party applications with our technology. Aw, how gracious. Oh, that's kind of interesting. You know, I'm certainly for innovation in the crypto space, and yeah, if that makes it more accessible to the average person wanting to blossom out and try and set up their own dApp, I'm all for it. But on a different note, I kind of lined this one up, and I don't know if this is exactly the right order, but I've got to read it because to me it's emblematic of the, how should I say it, the great security threat to our personal security, our financial security that banks and other institutions represent or are made to represent because of our current regulatory standards with regard to how much data they're supposed to be accumulating about their customers. You know, it creates for them an extreme liability because if they fuck up in their security somewhere along the line, people lose their information and their identities and possibly their finances could be compromised as a result. And that's a shit ton of responsibility to be taking on if you don't necessarily have to do it. Because with cryptocurrencies, you don't necessarily have to know who I am to know you got the fucking money. And that's exactly what's necessary for commerce to happen, right? You get what you want, I get what I want, everybody happy. Anyway, I got this thing on abc.net.au, so I'm assuming that's Australia. Commonwealth Bank admits it lost the details of almost 20 million accounts and didn't tell customers. This is authored by Jane Norman and updated approximately 5 hours ago. Oh, this is lovely. The Commonwealth Bank has confirmed it lost the financial statements of almost 20 million accounts, but insists its customer information has not been compromised. We can't find it, but we know it's not been compromised. The statements containing customers' names, addresses, account numbers, and transaction details from 2000 to 2016 were stored on 2 magnetic tapes, which were lost by subcontractor Fuji Xerox last year. Lost my ass. When the bank became aware of this incident, it said it ordered an independent forensic investigation to figure out what had happened and informed the Office of the Australian Information Commissioner, OAIC, my apologies. The inquiry, conducted by KPMG, determined the tapes had most likely been disposed of. Most likely. Commonwealth Bank's Angus Sullivan described the incident as, quote, unacceptable, but said the tapes did not contain any passwords or PINs that could compromise customers' accounts. I want to assure our customers that we have taken steps necessary to protect their information, and we apologize for any concern this incident may cause, he said in a statement. Quote, the relevant regulators were notified in 2016, and we undertook a thorough forensic investigation, providing further updates to our regulators after its completion. As a precaution, the bank said it had been monitoring the 19.8 million accounts involved and had so far found, quote, no evidence of customer harm or suspicious account activity. But the bank never alerted its customers to the potentially massive privacy breach and has only gone public after BuzzFeed News broke the story. Mr. Sullivan has defended the bank's decision, saying it had discussed the matter with the OAIC, which told the bank it did not intend to take any further action. However, Mr. Sullivan said the OAIC contacted the bank this week seeking more information about the possible breach. ABC News understands the breach happened when Fuji Xerox was decommissioning a data storage center where the customer records were being held. The two magnetic drives were scheduled to be destroyed, but when the company failed to produce the, quote, destruction certificate, the Commonwealth Bank launched an investigation. Quote, why has it taken years and a media report for people to find out? Shadow Treasurer Chris Bowen demanded the federal government and Privacy Commission provide full accounts of what was known about the loss of data and described the reports as, quote, extremely concerning. Quote, it is only natural that CBA customers would be worried about the breach. Our financial information is one of the most important things to protect, he said. Quote, what did the Turnbull Government and Information Commissioner know about the breach? Quote, why has it taken years and a media report for people to find out? It caps off a bad week for the bank, which was slammed by regulator APRA for, quote, widespread sense of complacency and lack of accountability that has led to multiple regulatory breaches. The commission heard advisors at a CBA financial planning business continued to charge fees to customer they knew had died. This included one instance which fees were charged for more than 10 years. Jesus Christ, dude. That's not complacency. That's fraud. That's robbery. Fuck you. A 2012 Deloitte report revealed that at least $700,000 in ongoing service fees were being charged to more than 1,050 clients, allocated to more than 50 inactive financial planners who had left the business before 2012. It also noted that CBA may have undercharged or overcharged 5,000 clients up to $4.3 million. The bank has accepted ASIC's enforceable undertaking for fees charged to more than 31,000 financial advice customers who did not receive an annual review. Dude, this isn't complacency, okay? And you know what? cryptocurrencies aren't going to solve that shit. I mean, they will, but they won't. Let me put that a different way. And I talked to a gentleman at Jiu-Jitsu about this, and he's in the medical industry, and I was telling him that, you know, we're going to put it all on a blockchain, but that's not going to fix anything. And it was really funny because it took a regulator talking about cryptocurrencies and something that I read or something that I heard about them saying about cryptocurrencies, or the use of Ripple specifically, I think it was, that there's no guarantee that the participants will report at a scheduled time. Or report all of the data that happened up to date. They could withhold some. And I've said this before, that you can, in fact, lie to a blockchain. It depends on which blockchain we're talking about, and exactly who's mining it and how it's being tended. Because if you have all the nodes, you can lie to it all day long, and you can issue reports based on it. If you can go back and edit it, like I believe Accenture has developed an editable blockchain. If your mining algorithm or whatever is built on top of Accenture's editable blockchain, you could be going back and editing it and resubmitting the data, and nobody would be the wiser. As long as it just looks consistent. You know, you can post-op the numbers and make them look consistent. You know, as long as you can mimic the look of it, you can tell people what they want to hear about it, and nobody's the wiser. And this is the danger of getting away from public miners. And there's this big push that people calling mining inefficient. Yes, it's supposed to be fucking inefficient. It is supposed to be more expensive for you to cheat than it is for you to play according to the fucking rules. That is why we mine. And this whole idea that we need to get away from public mining. No. That's getting away from the known means of accountability that we have. And once you're out of it, that's it. The people that are communicating the information could be just as easily lying to you. And you will have no means of recourse and no means of confirmation. That is what they're driving you towards with all this talk about, oh, we don't need blockchains that are mined by public. We can do it from banks. We can have private blockchains that only we can see and only we can mine, but everybody else will be forced to transact in. Fuck you. I mean, you want to push this shit further into the dark? That's exactly how you do it. You know? I saw something on my Twitter feed about somebody wanting to shrink the block size. I'm like, are you trying to disincentivize mining? Because that's exactly how you disincentivize mining. Is you make less room for the fucking transactions. Then the miners get less transaction fees and have to charge you more for the available space. And that will disincentivize people wanting to use it. And that's both SegWit people and regular people too. Because it will get more expensive for everybody. You know, I mean, so what? You bump most of the regular transactions off of the net. What's going to end up happening? All of the SegWit transactions that do happen will be the ones that have to take up the transaction fee gap there. The fee isn't going to go away. Somebody has to pay it to the miners. You know? I think this is one of those things where we're going to run it into a fucking wall and look back at the parts and figure out where we fucked up and go forward. And I think it's this whole SegWit business and this whole deferral to authority idea. The whole idea that regulators can tell us exactly how to do things. And I think that's incorrect. Because I think that you could write some new coin tomorrow, and you could get together with some friends in Telegram and give them some of the coins that you mined and say, hey, yo, it's really cheap to mine my coin right now. You might want to mine it. Maybe if enough of us mine it, we can trade it on an exchange. Maybe somebody will trade us some Bitcoin or some Ethereum or some Litecoin for it. Maybe we could do some OTC trading using this coin that's unregistered and unaccountable on any surface exchange. Maybe we only do OTC trading in Tor or something like that. And there goes all your accountability. All this money will be moving around without any ability in your hands to monitor it or tax it or anything like that. We've already seen that this market will adjust to the circumstances that it's presented with. We've watched it play out in Venezuela, and I keep talking about it because it is how people are. These are normal reactions to normal pressure, abnormal pressures being applied to this market. Abnormal pressure, abnormal response. Normal pressure, normal response. The normal pressure for this market is just back off and let the economic activity that it enhances or allows to be enhanced to enhance your lifestyle. Because the more you try and stand in front of it, the more it's just going to crush you. That's all there is to it. Fucking Venezuela showed us exactly the order of events. The government applies pressure on legitimate miners who are just taking advantage of the fact that they happen to have really cheap electricity there. And what happens? Did the mining go away? No. The cops that seized the mining gear, because it wasn't technically illegal to mine Bitcoin there. And so they just seized the mining gear and they set it up at home. It didn't go away. It didn't go to a fucking landfill or anything like that. The cops started using it to mine. And did the miners stop mining? No. They just mined something else. Something that wasn't as easy for you to track. More of them probably became traders and just started trading coins, making money on the arbitrage and turning around and using it to sustain their daily lifestyle. This trend is not going to go away. And I believe that China, if anything, is showing us the way that mining is going to adapt. That we are going to see more pressure applied to the bigger mining operations because they're easy to spot. And the network isn't going to go away. The Bitcoin that are circulating right now aren't going to go away, so there will need to be some miners. And the mining reward will only get easier for them to get as the bigger ops are cracked down in China and elsewhere. And I don't know, I think that if anything, we're going to see a transition where the governments stop trying to fight this and really start trying to get on board. And I think we're hearing the first murmurs of that with that CFTC statement. Like I said, it could be one of two things: that they're finally coming to terms with the reality that the harder they push on one point, the more they'll push the pressure to somewhere else, out of their grasp. Or, and this was a third kind of caveat that I was thinking about in the background in my mind, and this one is normal, and we've seen it elsewhere too, where the CFTC commissioner probably set up like an account with, Binance or Bittrex or anywhere else that he could be trading, GDAX, Gemini, and he got a taste of it. And with his technical knowledge that he's already had from eyeballing it for the last, 2 or 3 years probably, combined with his own experience trading it, he's like, well, fuck. This is completely legitimate, man. I put my money in, I traded my money, I got more money out than I started with. Where's the scam here? I transacted it in the ways that are prescribed with Bitcoin and other cryptocurrencies, where I have a wallet on my phone now that is keeping up to date with the network, and I've got funds that I've taken off of an exchange and put back onto another exchange with it. Where's the scammery? Where's the flimflammery? Where am I being ripped off? Where's the fraud here? And he's not seeing it. All he knows is the amount in his account is like 20, maybe 30% higher than when he started, and he got him a taste for the crypto bug. That to me is a perfectly legitimate reason for his change in stance. Because I got to say, the tenor of his presentation during that CFTC SEC meetup, confab, or whatever, it was a little bit more stern. And like I said, I believe that there are 3 possibilities for the change in tenor. Number 1, there's been a change in their ability to regulate. So, like Bitcoin going to Lightning networks. Oh yeah, that's MSBs all the way around for everybody. And everybody that don't have an MSB will put a regulatory requirement on the hubs that says, if the transactions don't have this taint, that means that it was processed through a licensed processor, somebody who does have an MSB, then they got to fuck off. We're going to bump their transactions. You're not going to process them, and if you're caught processing them, we're going to bust you. If we catch you including transactions in a block that don't have the taint, we're going to bust you. We're going to shut you down. There's your regulatory yoke right there. And I mean, they aren't even like hiding the fact that it'll be a quote unquote hub and spoke model with this whole Lightning Network business. Meaning that you will be dependent on a third-party intermediary as to whether or not your transaction's clear. And like I said, they could be changing those fucking rules willy-nilly on their fucking nodes, and you don't know. Before you know it, the transactions that were good yesterday are no longer good because they have changed the rules. And that's that. You're asked out, buddy. You're too Dominican, you're too dark, you're too white, you're too Chinese, whatever. We changed the rules and fuck you. You can't transact on this network anymore. Your coins are no good. That's the threat. That's the censorship resistance quality that we've been talking about Bitcoin having, being taken right out of it and whittled away per protocol change. And you don't know, because your wallet's updating, and as long as it's updating and your transactions fit the previous criteria, everything's good until you try and move the coins, and then you find out really quick that they changed the rules behind your back. And like I said, there's some taint that your wallet doesn't have on it, some identifier that it doesn't have, some KYC CYA requirement that it doesn't have, and you're fucked. And your coins are no longer spendable until you resolve this kerfuffle. Might as well just put a gun to your head and say, give me your fucking money or you can't transact it. I mean, really, is that the kind of force that you came in here to find in cryptocurrencies? I don't think so. And I think there are enough people that object to that kind of ideology in cryptos that will fight against it because they got a taste of that early crypto and they know what this market is really all about. And like I said, they just won't comply. Anyway, I got this other thing here, and I'm debating which direction to take this in, because we do have mucho potent. Let's see here. What Lightning could look like. Yeah, we were just talking about that. Why not? This one's on BitcoinMagazine.com. After years of conceptualization and development, the first Lightning implementation are now in beta. As a result, more nodes are appearing online every day, as a growing number of users are opening channels with one another, and some merchants even started to accept Lightning payments. Yeah, some. It's like 3, 4, maybe. But of course, these are still very early days of the Lightning Network. While the main implementations are usable and some wallets and other applications are available, Bitcoin's overlay payment network is projected to improve over the next few years in areas ranging from network architecture to security and usability and more. These are some of the more important Lightning projects currently in development. Dual-funded channels. The Lightning Network consists of a series of payment channels. Each payment channel exists between two users, allowing funds to be sent back and forth between them. However, in this early stage of development, payment channels can only be funded by one of the two parties. The funding party must make a transaction to his counterparty. Only then can that counterparty return a payment within the same payment channel. The Lightning Network white paper, however, proposed dual-funded channels, for which a specification proposal has now been made by ACINQ, the company behind Eclair. As the name suggests, dual-funded channels will let both users partly fund a payment channel by each depositing some Bitcoin. This should bring more flexibility to the Lightning user experience, as users can immediately send as well as receive payment after having opened a channel. Submarine swaps. In order to make a Lightning payment, users must deposit funds in a Lightning channel. Once in a channel, these funds cannot be sent to regular on-chain Bitcoin addresses unless the channel is first closed. This means that Bitcoin in a Lightning channel is somewhat separated from Bitcoin in a regular wallet, not unlike how money in a checking account is somewhat separated from money in a savings account. But there are solutions to making switching between Lightning and on-chain payments more seamless. One solution is submarine swaps, developed by Alex Bosworth but conceptualized by Lightning Labs CTO Aloalua Osuntoken. Even before that, submarine swaps essentially let users send Lightning payments to a middleman on a Lightning network. That middleman will send a corresponding amount of Bitcoin to a regular on-chain Bitcoin address. It also works the other way around. Users can send regular on-chain payments to the middleman. That middleman will then send a corresponding amount of Bitcoin to a receiving Lightning node on the Lightning network. Importantly, with submarine swaps, this conversion is done, quote, automatically. Using a trick that is already embedded in the Lightning network, the Lightning payment and the on-chain payment can effectively be linked to each other. Wow. Okay. I want to know who on the on-chain side is obligated to honor the the on-chain payment, the linked payment on a Lightning Network node. Continuing. This makes it impossible for the middleman to steal funds by not forwarding the payment, quote, or in parentheses, in agreement with the users. He could charge a small fee for his services. Splicing. Another solution to make the Lightning user experience more seamless is called splicing. In essence, splicing would let a user, quote, top up funds in an existing Lightning channel or drain funds from it, potentially while keeping the channel open. The idea is simple. Any Lightning channel starts with an opening transaction, which ensures that both users consent to moving the funds in the channel. The rest of the Lightning channel consists of a series of subsequent transactions exchanged between parties, which aren't usually broadcast to the Bitcoin network. The funds in the opening transaction don't move until the channel is closed. When, quote, splicing in, users take the opening transaction to instead send funds to a replacement opening transaction, which includes more Bitcoin from one or both users. Once this new opening transaction confirms on the blockchain, the channel is topped up. Until the new opening transaction is confirmed, the two users can simply update both the old and the new channel at the same time to avoid any, quote, channel downtime. Conversely, when they splice out, users take the opening transaction to send funds to a regular on-chain address and potentially keep some of it in the channel using the same trick. This way, users can make on-chain transactions straight out of a Lightning channel. L2. Each time a new payment is made, Lightning channels between users are updated to reflect their mutual balances. The trick used to accomplish this currently includes a penalty for users who try to cheat by broadcasting an older balance, presumably because that older balance would pay them more. Cheating users can lose all funds they have in a channel. Can lose. The problem is that the broadcast of old balances is not always a cheating attempt. There are a number of scenarios in which users can accidentally broadcast an older balance. For example, because of a software bug or a backup gone wrong. In such scenarios, a complete loss of channel funds is quite a heavy punishment. First published in April 30th, 2018, L2, i.e. Level 2, is the newest proposal featured in this article. Developed by Blockstream's C Lightning development team, Dr. Christian Decker and Rusty Russell, the Lightning Labs OSU token and Lightning Labs OSU token, L2 updates the channel by building a chain of time-locked transactions where each transaction spends funds from the previous one to reflect the latest channel balance. If one user broadcasts an older transaction representing an older channel balance, her counterparty has time to broadcast the latest transaction representing the latest channel balance. A solution like this could work today, but it isn't practical in cases of failure. It would require that the entire chain of transactions be broadcast and recorded to the Bitcoin blockchain, more or less defeating the purpose of the Lightning Network. Decker therefore proposed a soft fork change to the Bitcoin protocol to introduce a type of hierarchy in these types of transactions. Any newer transaction can override any older transaction without requiring all transactions in the entire chain to be broadcast. if this soft fork is adopted and activated on the Bitcoin network, Lightning users could create channels in both the current style and by using L2, depending on what they prefer. Compact client-side block filtering. While the Lightning Network is a second-layer protocol, the Bitcoin blockchain itself is still relevant for Lightning users for security purposes. Specifically, Lightning users must keep an eye on the blockchain to see if specific transactions are included. This can be resource-intensive, in particular for mobile users. A solution for this is called Simplified Payment Verification, SPV, and was described by the Bitcoin white paper. Current SPV wallets use a trick called Bloom filters to find out whether any relevant transactions happened. Unfortunately, Bloom filters are rather privacy unfriendly, as wallets essentially reveal all of their addresses to nodes on the Bitcoin network. They also have some scaling and usability issues, such as individual SPV wallets taking up resources from at least one full Bitcoin node. To tackle these issues, Lightning Labs, Osu Token, and Alex Axelrod, along with Coinbase developer Jim Posen, designed a new solution called Compact Client-Side Block Filtering, which they are implementing in the Neutrino wallet. Compact Client-Side Block Filtering essentially inverts the trick that SPV wallets use. Instead of wallets requesting transactions relevant to them by creating and sending out a Bloom filter to full nodes create a filter for all Neutrino wallets. The Neutrino wallet then uses this filter to establish that the relevant transaction did not happen, which is really all that users need to know to be sure they are not being cheated. If the filter produces a match, Neutrino fetches the relevant block to see if the match really concerns the exact transaction instead of a false positive. Interestingly, while this trick was designed with the Lightning experience in mind, it could be utilized to benefit regular light wallets as well. Yeah, and then you're dependent on whoever issues the Bloom filters to the what do you call it here? What is it? Bloom filter to all nodes. Full nodes create a filter for all Neutrino wallets. Okay, so again, they could change the protocol rules that they're sending out to nodes to enforce, and that would change the filter types that are applied to the Neutrino wallets. And so your balances that were relevant today could be made irrelevant tomorrow. Gosh, don't you love that danger? Watchtowers! Oh gosh, let's introduce another third party in. To avoid being cheated, Lightning users must keep track of potential on-chain transactions that could be relevant to them. While compact client-side block filtering should make things easier, users do need to, quote, check in once in a while to make sure they're not being cheated. If they forget to check, it creates a security risk. Quote, watchtowers are a potential solution that can be traced back to the Lightning Network white paper and has since been improved by Lightning Network white paper co-author and lit developer Trajja, and others. As the name suggests, watchtowers could let users outsource blockchain monitoring to third parties! Woohoo! Currently, watchtower designs are not set in stone, but would roughly work like this. Whenever users update a channel, they send a small data package to a watchtower. The first part of this package is a, quote, hint of a transaction they should look for. if it were a piece of a puzzle. As if it were a piece of a puzzle. This hint alone doesn't reveal anything about the content of the transaction that the watchtower must look out for. Users don't give up any privacy in this sense. However, if the relevant transaction shows up on the Bitcoin blockchain, the watchtower can use the hint to recognize it. Then, with the transaction data on the blockchain itself, Watchtower can use the second part of the package they've received to reconstruct the penalty transaction. This penalty transaction sends all funds in the channel to the user that is being cheated. Or in the case of L2, it just broadcasts the correct channel balance. The penalty transaction can also be designed to let the Watchtower claim part of the funds as a reward, as an incentive to do its job. Let's see how much longer this is. Users can outsource channel monitoring to multiple watchtowers. Even if one fails, another might not, limiting the risk for Lightning users to a point where it's arguably negligible. Yeah, and just wait for one party to buy all of them slowly, and then they can broadcast the data, whatever fucking data they want, and fuck you. Automatic multipath payments. Whew! Let's introduce some more third parties, shall we? What makes the Lightning Network a network is that the payment channels between users are interconnected. Users can pay across payment channels through peers on the network that act as, quote, middlemen to users they don't have any direct channel open with. However, right now, a single payment must be routed over a single route. If one user wants to pay 5 millibitcoin to another, not only must he have the... Why don't they give it in Satoshis? For fucking Christ's sake. I have no idea what you're talking about with 5 millibitcoin. Now, if you said 5,000 Satoshis, I would know exactly what the fuck you're talking about. In a single payment channel, all of the middlemen on the route must also have 5,000 Satoshis ready in a channel to forward. The bigger the payment is, the smaller the odds of this being the case. Automatic multipath payments, AMPs, could go a long way in solving this limitation. First proposed by Lightning Labs, Osutoken, and Connor Fromknecht, The idea is simple. Larger payments can be, quote, cut up into smaller payments, all of which had their own route from the payer to payee through different middlemen. A challenge to realize this solution is that Lightning payments can fail, which would in this case mean that a payment is made partially. Partial payments can easily be a bigger problem than no payment at all. However, a merchant won't be satisfied with a partial payment, while a customer won't be happy with spending any money for nothing. The solution to this problem is that AMPs use an extension to the hash time locked contracts, which are already used along Lightning routes to involve passing secret data along the network, i.e. your keys. Using a trick similar to the one used by deterministic wallets which generate multiple Bitcoin addresses from a single seed. The smaller pieces of a larger payment can only be redeemed by the payee if all of them are. If some secret data doesn't make it through the route whole, the entire payment fails. Atomic swaps. The Lightning Network is designed as a scaling layer for Bitcoin, but since many altcoins are software forks of Bitcoin's code bases, it's often not difficult to create similar scaling layers for these altcoins. Already a small Litecoin Lightning Network exists, and more Lightning networks are likely to follow. Interestingly, these networks don't need to remain separate in the future. Oh no, let's make them all one network and fuck everybody at once. Using a fundamental building block of the Lightning Network called atomic swaps, first proposed by Tier Nolan and realized by Lightning Labs from Next, payment channels can be linked across different blockchains. In other words, a user can send Bitcoin, and as long as a node on the network is willing to make the exchange, another user can receive the payment as Litecoin. That's weird. Of course, this also means that users can send such payments to themselves. They can send Bitcoin and receive Litecoin. In effect, the Lightning Network could establish a network of trustless cryptocurrency exchanges. And thankfully, we're up to the last little subset here. Channel factories. The main benefit of the Lightning Network is arguably its potential to vastly increase the upper limit of Bitcoin transactions without burdening the Bitcoin network, i.e. without properly compensating the Bitcoin miners who rely on transaction fees for ops and things like network improvements and things like that, you know? As long as two users both have funds in their channel, they can pay each other a virtually unlimited number of times, while only requiring two on-chain transactions, one to open a payment channel and one to close it. Oh, and on that point, every single one of those transactions is going to have a miner fee associated with it. And so if the miners can't be counting on thousands and thousands of transactions per block, they're going to charge the available transactions more. Continuing on. Still, 2 transactions per payment channel could add up if Bitcoin and the Lightning Network gain more adoption over time. The proposal by ETH Zurich researchers Christian Decker, also of Blockstream, Roger Waterhofer, and Conrad Burchert, called Channel Factories, could further decrease the average number of on-chain transactions required per payment channel, perhaps significantly. Loosely based on earlier Lightning-like proposals by Decker and Watenhofer from 2015, channel factories are a type of payment channel. Sorry about that. Are a type of payment channel that can exist among many users. Meanwhile, like any payment channel, a channel factory only ever requires 2 on-chain transactions. If Schnorr signatures are implemented on Bitcoin, these transactions could be quite compact, even if it involves many users. The channel factories can in turn act sort of like subchannels for the Lightning Network. Participants within a channel factory can open and close a virtually unlimited number of Lightning channels with each other without requiring any additional on-chain transactions. By doing so, they could in theory bring the number of required on-chain transactions for Lightning Network down by a magnitude. Yeah, for more information on this topic, see this new scaling layer could make payment channels 10 times more effective. Yeah, and so there you have it, the big spiel about Lightning Network. And what they don't tell you is who's going to be the arbiters in all of this business. And they do not tell you whether this is going to be multiple parties or one party. I can see the potential in here for one party to be doing all of these services and doing it rather cheaply at the expense of everybody else, as in miners. You know, because they'll be conducting billions of dollars worth of transactions and only paying like $10, $15 worth of fees. That's not good for the Bitcoin network. And what about these changes in rules? Again, they could be changing the protocol rules on the fly, and nobody is the wiser, because they could be applying them within their own network. And they were just talking about in that last section there that it could be months before they're touching back to the Bitcoin network, and nobody is the wiser as to whether or not their transactions are valid. There could be transactions happening in the background that they don't know about, that could happen years later, while all of their value has been bouncing back and forth and accumulating in just a few select spots and not in their wallet. You know, George Carlin made a joke about, the American dream, being just a dream or something like that. There was something about the party and you're not in it. Well, that's pretty much what I see here with this Lightning business. Because again, they could redefine the rules to where, the transactions have to have a certain taint on them, and if they don't have the taint, or they aren't in a certain format, and the certain format is proprietary, and only a certain number of people that are licensed to issue and transact on that protocol are able to do it, and they have to pay thousands of dollars for the license. There you go. There's the vast majority of you motherfuckers kicked right the fuck out of Bitcoin. And there is a solution to this, and I wish you guys would take this to heart a little bit more than you already have. And the indications I've seen on the mining front indicate that you are still taking this to heart, but not quite enough. I mean, if you did take it to heart significantly enough, the demand for video cards and ASICs would rise so high there would be no fucking pitter-patter about how many fucking video cards that Nvidia was selling, or anybody else. Their quarterly reports would show such a significant increase in profits that they would have no choice but to say, yes, mining represents about 70% of our annual returns or our quarterly returns, and we really need to be taking this a little bit more seriously, and we need to be servicing this sector of our customers a bit more fastidiously than we are. Otherwise, somebody is going to come along and eat our fucking lunch. Because I'm telling you right now, the way to avoid all of this bullshit is to be a miner. And it's on my schedule of things to be devoting some funds to on this next go round. I intend to be mining because I see that the diversity of miners and the diversity of people having the blockchain and having a copy of it that they're keeping track of via a live node mining that they are bothering to host, that is going to preserve Bitcoin. Because all I can see with this Lightning Network bullshit is a return back to trust networks. Because you're not going to be touching back to the Bitcoin blockchain, but once a month, once a year maybe. And really, do you want to be living with the kind of uncertainty? I've got all kinds of question marks in here. Every time they talk about involving a third party, that's a question mark. And those question marks could be represented by one entity. Can be represented by one entity, i.e. not you. So you want to preserve the fucking Bitcoin network? You want to preserve cryptocurrencies as a public venture? Fire up some fucking hash power, dedicate it to a mining pool, and enforce the rules that you wish. Mine the variant of Bitcoin, the version of Bitcoin that you want to. And if you don't want to fucking mine that SegWit shit, and you don't want to facilitate this bullshit consuming the Bitcoin network, then fucking do it. Find a variant that doesn't have the SegWit in it, and mine that. find a mining pool that is hosting a grouping of miners that are mining that variant of Bitcoin and dedicate your hashing power to it. Because that is how you are going to defeat this bullshit. You don't want to see the banks take over Bitcoin? That's how you defeat it. Anyway, let's go ahead and throw back down into some music. And we did play a diverse arrangement of stuff, but not quite this diverse. I'm going to be throwing down some strapping young lad here. I'm trying to pick the right song. And it's always a crapshoot because it's been a bazillion years since I've actually listened to this album. And most of it's really, really good, but some of it's kind of I really like the whole album, really. I can't complain. Home Nucleonics by Strapping Young Lad. No, that one's too short. Let's go with Detox. That one sounds more fun. Knowing Devin, it was probably a lot of fun when it happened. Here it is, Detox, Strapping Young Lad, here on Coin Metal. I was gonna play Hardwired there, but I think I'll save that for our last dance. But yeah, I just noticed that it was 10:53, so it's getting really, really close to the end, and I wanted to do my normal closure. But yeah, as far as Lightning, we read that ostentatiously long thing, and I'm still not any more comforted by the idea of it than I was when I started. So I really don't know what these people are trying to achieve other than completely fuck up Bitcoin by making it into a bundle of trust layers that you're just going to have to trust, man. You're just going to, don't worry about it. Oh, your coins are valid today. It's all cool, man. You don't have to worry about it. You just trust us. Just trust us. I mean, and really, how many times have we heard that before? We were talking about the CFTC and their change in stance. I really think that the people that are trying to push this change in Bitcoin are in league with like the CFTC and the SEC and all those other guys, and they're saying to them, "Oh yeah, no problem, man. We're gonna get this shit forced through, just like we did with SegWit. Everything will be wonderful, and everybody will be regulatable on the Bitcoin network using this technology that we have." And that to me, it's a distinct possibility. However, I will not rule out the possibility, the very real possibility, that the CFTC's head changed his mind for the same reason that everyone else in his position has. He got him a taste of that crypto, and the crypto bit back. And that is all for this evening. We will be back again on Friday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as promised, I got one last dance. It's going to be Metallica, Hardwired. Thank you very, very much for listening. You can always find me on Twitter. I have been really quick, or at least quicker, about getting these episodes up onto the YouTube channel. So if you did miss out on anything and you want to go ahead and listen back to it, you can find it there. Like and subscribe on YouTube. And I'll see you guys on Friday. Thank you very, very much for listening. I certainly appreciate the support. And you all have an excellent evening.